durations in time and durations in price. You need to be able to identify durations in time or price happening inside uptrends. Why? Because they determine the type of techniques, the corresponding techniques that you can use to participate in a stock or not, right? So we have here, so we're done with this. So we talked about this. This is your uptrend line. Inside an uptrend, we have consolidations in time. Guys, duration is just another name for consolidation or correction, right? So typically, a duration in time, people also use the term consolidation. A duration in price, people often use the word pullback. If you want to be very technical about it, as in technical textbook, a pullback is essentially a less than a 10% drop in price. A 10 to 20% drop in price is called a correction. Anything more than a 20% drop is called a bear market move lower. Right? Okay, so what do we have here? We have a consolidation in time or a duration in time. We have a correction in price over here. All of which you can use corresponding techniques. We talked about Fibo retracements for durations in price. And we talked about area patterns. So these are the durations in time that we're talking about right now. Durations in time usually manifest themselves as area patterns. So that's so here I already introduced these terms to you a while ago. Why are durations in time important? Because durations in time or area patterns or consolidations in time set up a potential for a breakout. A breakout. What did we say is a breakout? It's a beginning of an uptrend. Very good, right? So that's essentially why we want to look for area patterns, because they are potential breakout candidates. In the same way that you want to stay away from breakdown candidates, which are obviously beginnings of a downtrend. Very quickly, what are examples of breakdowns from area patterns that are happening today? All right, let's look at something like AEV. Initially, you might be looking at this, right? Possibly you have a breakdown from a sideways move over here. See that? Some people might also argue for maybe a channel break, which but let's look at something like GT Capital. So do you guys see an area pattern breaking down? So you see an area pattern over here, and you have a sideways area pattern over here. You guys see that? And then it breaks down. And then what do we see here? If we take a line from top to bottom, and then put the line here. Whoop. So I draw the line to make sure I get the right size between the support and resistance. And then I click on it and I drag it all the way to the breakdown point. And then if we zoom out, then at least from just using simple area pattern techniques, then I can already suggest that, zooming out the long term, then I can suggest that the minimum that we're going to see for GT Capital will be roughly around 837. You guys see that? And that's why area patterns are actually very they're more predictable relative to durations in price. And they have more prevalent guidelines. And to be honest, they're actually less scary to trade. The sentiment barrier that you need to break through yourself mentally is actually much smaller compared to a duration in price or buying a downtrend or a sideways even, which is why this is always one of the first things that we would recommend people, at least who want to start out at least trying this, to start out in these types of opportunities. So here you see potential for 837. It could also mean that, for example, if you bought it at the bounce of support here, then obviously if this line that your basis for the bounce of support is why you bought, then that line should also be the basis for you liquidating your positions and cutting losses before it reaches to a point where those losses could become harder to deal with. So what are other examples of prices breaking down today? So what do we have in Surpass today? We have a potential bounce of support. You guys see that? We had a potential bounce of support. Now, whether this is a double bottom, a reversal, or is it a beginning of a descending triangle or a rectangle before it follows through lower, nobody knows. One of my old teammates would always say, OGK, only God knows. Diba? Walang magaling stock market, walang nakakaalam. All you can do is, this is your support level, that's your basis for on a support bounce. And keep in mind, you're buying a downtrend. You see that? Zoom out, downtrend. And yesterday, Surpass just reported what? 50%? 50% down in revenues pa? 50% reduction in revenues year on year. Diba? Now, maybe some of you will argue, no, but price is a leading indicator of actual fundamentals, and it's pricing in the initial coin offering that they announced yesterday. That could be so, but it's still too early to say definitely what it is at this point. It could be as simple as a continuation pattern before the downtrend resumes itself. Could be a double bottom, but either way, if I'm buying the bounce of support, then that would also be my basis for protecting my position if it goes down that way, right? But either way, this is a predominantly downtrend thing, so it's always still best to focus on uptrending issues.